All right, folks, welcome to my recording. My name is Kalu Aja, and I'm doing this recording to explain the Nigerian tax reform in a very, very simplified manner for you, especially if you're not a finance person or you know nothing about taxes, right? We're going to just walk you through what's going to happen January 2026 when these new tax laws take effect. So let's go in and see what we have lined up for you. First of all, we're going to tax income. We're not taxing assets, nor are we taxing bank transfers. This means that we are only going to tax, and the tax reform has actually highlighted what is income. Prices, winnings, honorarias, grants, awards, profit from transactions from digital assets are all considered as income in addition to your normal salaries and income from a business, a small business. These are all going to be income that are going to be taxed. We don't tax assets. So if you buy a car, the car isn't taxed. Neither is the taxman going to tax your bank transfers, which means if you simply just transfer money to your account, that does not trigger a tax, right? Because transfers are not exclusively going to be looked at as income. So we're taxing the income that you make, and you must file taxes irrespective of your income. You can't say I earn less, I'm not going to be taxed. No, you file your taxes so that way you can be assessed as not owing any taxes in that financial year. So important points to note here, you've got to file, and we only tax income. We don't tax assets or bank transfers. There are three numbers you've got to know in this whole tax reform. Just three numbers. You've got to know what 500,000 means, what 800,000 means, what 1.5 also means. We're going to break that down for you in this coming slides. 500,000, essentially, the new tax reform gives you a rent relief of 20% of the annual rent that you pay to your landlord, capped at 500,000. So whatever rent you pay, you can only claim a maximum of 500,000 on that rent, right? If you own your own home, you can claim the interest you pay as a mortgage to the mortgage lender as the relief. So it's either you claim the rent or you claim the interest that you're paying to the bank or whoever is lending you funds to buy that mortgage. So that's what that 500,000 naira limit means. It's going to be your rent relief when you file taxes. And not to worry, we're going to show you how this 500,000 shows up on your tax return. The next number you want to know is your 800,000 naira number. That is the limit where you have a zero tax liability to the government. So if you earn 800,000 or below, you will not pay any personal income taxes to the government, right? You only pay personal income taxes once you earn above 800,000 naira. And so you see right here on our table, the first 800,000 naira is tax free, i.e. you pay no tax on that income that has been earned. The next 2.2 million will be taxed at 15%. You can see a huge gap between 2.2 and 9 million before you fall into the 18% tax bracket. So you've got your first 800 is zeros, your next 2.2 is going to be at 15, and then of course a big income gap there before you fall into that 18. And you can see as you progressively earn more, your taxes are also going to go up. So it's a very progressive tax that has been proposed. The more you earn, the more you are going to pay in taxes. Now, the last number you really want to focus on is the 1.45 number. So what I've done here is I took the monthly income that you make, and then I put the monthly per month tax that you would have paid under the old scheme. This is just the annual of that, and this is the monthly income, monthly tax that you would pay under the new scheme. If you look at this magic number 1.45 million a month, that is the income level at which your taxes that you pay under the new scheme will be more than the taxes you paid under the old scheme. So essentially, if you earn 800,000, right, you pay no tax. But if you earn 900,000, yes, your taxes will go, you would pay a bit of taxes, but it's less than what you paid under the old scheme. That's what this is basically showing. So the green shows that at the level of 1,500,000 and below and all that, you do pay taxes because you are earning more than 800,000, but you are paying lower than what you'd have paid under the old scheme. But once you get to 1.45 million every month, your taxes will then go up. Again, remember, this is assuming there are no deductibles. So you're not taking any deductibles on your income. You're just basically saying my total income is going to be exposed to taxes. I'm not going to take a rent deduction or any other deduction. That's the magic number right there. The point is, guys, what I'm showing this slide, you've got to take your deductions to reduce your taxable income. I'm going to talk about that more as we go along into the presentation. How can you reduce your taxable income? 5 ways. The first one is you're going to contribute to a retirement savings account, including voluntary contributions. So if you make your statutory contribution, which is going to be 10% by the employer, 8% by you of your basic housing and transport, any other voluntary contributions that you make are also going to be regarded as tax exempt, right? So the more you contribute, the more you reduce your taxable income, right? Even if you're a self-employed person, you can still contribute. The National Pension Commission has a self-employment portal where you can register your company and you can still pay, even if you don't have a company that's like a formal company that you work for. Life insurance, if you buy life insurance and you pay a premium for yourself and for your spouse, those premiums are also deductible, right? So if you also contribute to the National Health Insurance Scheme, that contribution, the premium is also deductible. Same if you contribute to National Housing Fund, that's also going to be deductible. Again, if you pay rent, you get 20% of the rent relief that you pay, subject to a cap of 500,000. Also, if you pay the mortgage interest, like we talked about, the mortgage interest is also going to be deductible. So if you own your own home, but you are paying a mortgage, that's deductible. But if you're paying rent, that is also going to be deductible up to a cap of 500,000 naira. This is how it would look when you file your taxes. And the key word here, guys, is see your total income is different from your taxable income. What you want to do is to reduce as much as possible your taxable income. How do you do that? You already have the deductibles here, right? So we put, for instance, a 1 million naira total income. That's going to be the salary that this taxpayer is paying. He's taking his 20% of his rent. He assumed he paid 200,000 as rent, so he took that whole allowance, 200,000 as rent, not up to 500,000. So you can take that in. He contributed for the year 180,000 to his retirement savings account. He's put that in as well. He's paying for life insurance, 25,000 for himself, 25,000 for his spouse, so 50,000 for both of them. That's the premium right here. He's also paying the mortgage interest for the year, 50,000 as well. We put that in here as well. Then the Nigerian Housing Fund and the Nigerian Health Insurance Scheme is also contributing 25,000 naira respectively to both of them, right? So his total deductions allowable by the taxman is going to come down to 530,000. He's deducting these total deductions from his total income here. This is what the taxman is going to look at. The taxable income, not the total income, but the taxable income. Now, a few things here. In the past, these allowable deductions were given to you automatically, which meant that you got 20% of whatever was in your total income as an automatic deductible. Right now, you've got to go out yourself and buy these, i.e., you've got to go open a retirement savings account, buy insurance, do your mortgage if you're buying your own home, and contribute to the NHF or the NHIS, as it may be, right? The more you contribute, then the more you reduce your taxable income. If you don't contribute, right, like we said in the past, if you simply do not take your deductions, your taxes will go up. If you earn below 1.45, it will go up, right, but it will not be as high as it was in the past scheme. but it will go up because you've not taken advantage of your deductible. So the lesson here is these are open to you. These are legal ways to avoid taxes. You want to take advantage of them. How do you do that? Sometimes your company will pay. Ask if they will pay. They will not pay. Make sure you do them. Make sure you file to reduce your taxable income. Capital gains, when we buy and sell shares, property, whatever it is, right, like you buy and sell, right? It's going to trigger a tax called a capital gains tax if you make a profit on that transaction. So let's say you buy shares and you make a profit, you will pay a capital gains tax, but it's being capped with using these two criteria. Number one, the gains must exceed 150 million. And number two, it must exceed 10 million within 12 consecutive months. So if you sell shares for, say, you make a profit of 10, 20 million, it will not be taxed because it hasn't exceeded 150 million. So you would not pay tax or capital gains tax on that transaction, which is good. That's a big allowance for us, right? Okay, finally, what should you do with all this information? Remember, the focus is on taxable income, not just income, but taxable income. And we've explained that you reduce your taxable incomes through the legal method of buying deductibles. What are the deductibles? Life insurance, retirement savings account, national health insurance scheme, national health insurance scheme. If you're paying the rent or you're paying the mortgage, you also deduct those as well, right? Either one of them. So that's how you reduce your total income and focus just on your taxable income, right? Now, if you're employed, you want to go ask your employer, come 2026, how are we going to file taxes? Are you going to file on my behalf? If they say yes, well, how do you know I bought a new pay for life insurance or I'm paying a rent? Find out. If your company won't do that for you, you've got to go out and file on your own, right? So you can get those full deductions and reduce your taxable income. Again, take advantage of these deductions. Tax avoidance, right, is legal. Tax evasion is not. And these are legal ways to avoid tax. So make sure you take advantage of them and ensure you file taxes irrespective of your income. Even if you earn 1,000 naira, which is well below the 800,000 mark, you've still got to file taxes. You cannot assume that because you are below the income threshold, the government will know. You still have to file a tax return. That gives you a tax clearance for that fiscal year. Very important, guys. All right, thank you so much. Like, it's going to be a very short presentation, so that way you now have an understanding of what's expected from you. It's not new, guys. This is basically what folks do when they pay taxes. We are taxing your income. We're not taxing your assets or your transfers. There are a few numbers you have to remember. The 500,000, which is your rent relief maximum cap. The 800,000, which is your maximum income that you've got to hit before you start to pay taxes. Your 1.45 million, which is the magic number where if you earn above that, you then start to pay taxes if you took no deductions. Your taxes will go up, but they will be less than what you were paying in the past. We also talked about your deductions, how to get them. Number one, your retirement savings account from a pension fund administrator. Number two, you can buy life insurance from an insurance company for yourself and for your spouse. Number three, of course, is rent or mortgage interest, whichever it is that you are paying. Of course, then we have the National Housing Fund and the National Health Insurance Scheme. These are your legal deductions to reduce your total income and bring that taxable income really low so you don't have to pay too much to the tax man. I hope it's as you've gotten a bit of nuggets from this presentation, and if you have, please do subscribe and also share so your loved ones and those who don't love will of course learn about taxes and how to reduce, of course, their taxable income. Thank you so much, guys. I'll see you guys when we do another session. We're going to do the corporate side as well, give you the same simplified version. So if you have a company, watch out for that video as well. I'll see you guys in the next video. Take care and bye.